Currencies. I'm going to hand you over to Victoria, who's going to tell us all of that. I was about to have, and they've all walked off towards the food.
Well, they're just stocking up. So
yeah, so I'm going to hand over to Victoria. She's going to tell us more about currencies. Thank you, Victoria.
Well, thank you guys, and thank you very much, Chris, for giving me this opportunity. You'll see all the equipment here. This is probably like the third time I've done this presentation, and none of the recordings have come out, so I keep trying, hoping that it will get better. But fortunately, I've arrived today, and Chris has all this amazing equipment, so fingers crossed it should come out well. So thank you for being my attentive audience and giving me some feedback. So before I begin, is there anyone here who hasn't heard of CBDCs? No, you haven't? Oh, okay. Yeah, when I gave this talk to my local Nottingham group, there were a few people who hadn't heard of CBDCs, so I'm very impressed that you haven't heard about them, but you came along to hear about them anyway. So CBDCs are central bank digital currencies, and interestingly enough, when I arrived, I said to Chris that on the way down here, on the M1, about 20 miles north of the M25, then someone had painted on one of the bridges, say no to CBDCs. So it's certainly something that's starting to come into the general knowledge of the population, and I do think it's a very interesting topic. There are a lot of people who are worried about it because they feel that they are leading us towards a dystopian future, and I think they definitely have that potential. But fortunately, because Bitcoin exists, we have the opportunity to go in a different direction. And so this is the reason why I've done this talk, and I make an effort to make sure it's available to everybody, because I think, you know, some of the arguments are really, really important, and I think it's really good that we're having this discussion and that this information can be shared with people. So what we're going to talk about today. So I'm going to do an introduction, tell you a little bit about who I am. I'm also going to talk about what CBDCs are. Why do they matter? In relationship to this, I'm going to go a little bit into the history of modern money. I'm going to talk about how this influences poverty, and then to finish, I'm going to talk a little bit more specifically about how Bitcoin fixes this. So that's your roadmap, so you know when we're coming towards the end. So who am I, and what makes me qualified to talk to you about CBDCs and specifically Bitcoin? Well, my name is Victoria Collette Jones. And for 20 years, I worked in the UK as a dentist. Now, you wouldn't think that that's necessarily a profession that would immediately feed into Bitcoin, but for 20 years, especially because, I qualified in 1992, and around that time, the government decided to cut the fees that they were paying for dentists. Up until that point, dentists have been doing very well in the UK, and with the fee cut in 1992, this was a real knockback for the dentists, and it was at that point that private dentistry really started to emerge in this country. And because it was just starting to emerge, there was a lot of conflict over whether or not whether or not private dentistry was ethical. And because I was just beginning my career, I really had to wrestle with what the difference was in terms of where I wanted to head in my career. And in the end, I decided that the private path was better, because even though there were some people with no money, I really wanted to prioritise doing the best I could for my patients, and so that's why I decided to go down that route. So I spent 10 years working for other people, and then after 10 years I decided that if I really wanted to deliver the services to my patients that I could, I was fairly limited by what I could achieve working for other people. I really wanted to see what I could do with my own business. So I set up my own business in December 2007. And then, of course, with the financial crisis, less than a year later, that was the point at which I was really starting to run out of cash for running my business. And, of course, that was the point at which no bank on the planet was lending money to anybody. And so, this sent me on a deep dive into what was going wrong with the financial system. It didn't happen straight away because I had an emergency on my hands that I had to deal with. But when I finally got over that and had a chance to sit back and look, I was just like, well, what's going on with the financial system? And ultimately that led me to gold and silver as sound money, but realising that gold and silver as sound money was never going to be practical in my business, I realised there needed to be a digital solution, and so this was the point at which I became interested in Bitcoin. And I actually went through about a year encouraging people to pay with Bitcoin in my practice, even though it was a tricky thing to do then. And the lessons I learned from that and the story of how I got into Bitcoin, I was finding that I was spending quite a lot of time talking to my family and friends about this, and I would often be saying the same things, and so I decided that probably the best thing to do was put all of it into a book, because clearly it was new information for everybody. And so in March 2020 I produced my first book, which was Tooth Decay, How Bitcoin Fixes This, which is available on Amazon. And then to supplement that, I have a website called satoshispage.com where I write regular newsletters, which are designed to supplement the book. As I come across new information, it just helps to keep it fresh and relevant. And I'm pleased to say that my last 4 newsletters have all been published by the International Business Times, and so it's starting to get a bit more recognition there. You can see the cover of the book on the front page of their website. So, currencies, the hidden battle. Very few of us understand exactly how our money works. We take it for granted, it's something that we use every day. Our ability to have more of it or less of it profoundly affects the quality of our lives, and most of us struggle with how to make more of it without actually understanding what money is. And actually, once you do a deep dive into what's going on, you discover that there's an existential battle going on between money, as it always has been, and this new invention that we've got called Bitcoin. Now, sages throughout history, from Shakespeare to Napoleon, have said that the pen is mightier than the sword, because any battle that we go into is profoundly affected by the beliefs that we have. And so just the fact that we're here having this discussion, that you're taking interest in some of the ideas behind this, makes you a warrior in that fight, and then because of that I salute you. So where do we begin? So I became interested in Bitcoin in 2016, and as I was writing my book, I started to have opportunities to speak at conferences. I've been going to conferences for a while, and I was starting to gather enough information that I felt that I had something of value to offer to the Bitcoin community. And one of the first talks I did was this one in Birmingham in 2019 called Bitcoin for Business, because I really wanted to help Bitcoiners understand what the motivations would be for a business to actually accept Bitcoin in their businesses, because having been a business owner myself, it was understanding the fragility of the financial system that really motivated me to become interested in it. And so what I outlined in this talk was that I felt that there were 6 main reasons why people should be interested in Bitcoin, and for me there were 3 high-level reasons and 3 low-level reasons. So the high-level reasons, as I outlined to you already, was the financial crisis in 2008. By looking into what the differences were between NHS and the private sector, and understanding, some of the political and financial issues that went into funding the NHS. Some of those arguments fed into what was going on with our money as well. And then specifically for a business, especially being a highly capitalized business like a dental practice is, you have to have reserves behind the scenes for, points at which you might not have as many patients as you did before. But of course, if you're holding money for equipment replacement and things like that, if you're holding that, but it's constantly losing value, like the melting ice cube Michael Saylor refers to, then that's a problem. And so once I understood the soundness of Bitcoin as a form of money, that made me interested in holding Bitcoin as a form of capital. So those were, 3 quite high-level reasons. But some of the day-to-day issues that I had that really motivated me, one of the most frustrating things I often had as a dentist, because I started off with my a single surgery practice and I was just working with a nurse. One of the most frustrating things I would often experience would be, I'd be in the middle of a really complicated procedure and she'd come in and tell me that she couldn't take a payment because the card machine wasn't working. And really, for something so basic to work, for me to, I couldn't stop what I was doing. Often we'd have to ask if the patients could go around the corner in order to get some cash in order to pay instead. And so this made me start to reflect, because obviously if a patient left without paying, often they were paying quite high amounts for their treatment, so this could be a real issue. And also I was just like, we live in the 21st century, why can't we have a card machine that works properly? Also at the time, there were issues in the news of banks experiencing delayed payment transfers. So what a lot of people don't realise is that businesses, when they're accepting a card payment, it's not going straight into their bank account. They're using a third-party service to take that payment from the customer and then transfer it to the bank account. And again, normally there'd be a 3-day delay for that money to be transferred, but at the time, there were delays of almost 7 days. And so by the time I was experiencing this, I'd got beyond the urgency of the early days of my business. But clearly, this would have been an issue if it happened at a different point. And then, of course, the payment processing fees. Again, once I was operating as a business, I started to realise, just how much was being taken by these service providers of my revenue. My dad had a good saying, which was, revenue is vanity, profit is sanity. And the meaning behind that saying is that, you can take a lot of revenue, but if you've got a business that is not profitable, if you've got a business with very high expenses, then the profit is going to be very small. And of course, if the payment processing fees are coming off the top line, this becomes a disproportionate expense in your business. And so again, it wasn't until I had a business coach who pointed that out to me and showed me the maths, and I was like, what? So again, this was the third low-level factor that really influenced me. And so once I learned about Bitcoin, I realised how Bitcoin could help overcome some of these issues, and these were other reasons why I became interested in it. And so if we get back onto CBDCs, I think it's these 3 low-level issues that the banks are really targeting when it comes to CBDCs. There are issues of efficiency and speed behind the scenes that the average retail customer is completely unaware of, but business owners will be aware of it. And as I've just explained, they will possibly be feeling similarly frustrated with that. One of the things I reflected on was that it didn't matter how good I was as a dentist. If something went wrong with the banks or something wasn't working with my payment processing, I could end up going bankrupt and be out of business. And it was from that perspective that I really felt that this is an issue that needed to be addressed. And so the message seems to have got through to the banks, and certainly for at least they've realised that these are some of the weaknesses that they can target in order to get ahead of the game, because they realise that Bitcoin is gaining ground on them, and they need to help people they need to find a way of getting the general public on their side before they decide that Bitcoin is the way to go. So you've got, again, the Fed now just have a little diagram there of what they're trying to do, and essentially, what they're trying to do is use this technology to make these payments faster and more efficient. And so when it comes to the battle with Bitcoin, it's not just about becoming, obviously there's the matter of time trying to get there ahead of Bitcoin, but already Bitcoin, and as a digital currency, is slightly ahead of them, certainly in terms of the concept. And so what they need to do, I think, is really diminish what everyone believes about it. And so I've seen this advert, probably some of you have seen this advert going around.
Fiber. It's crypto only, mate. Potatoes. What a lovely malarkey.
Okay, so I think this is absolutely brilliant. Here's someone on the ground, doing their bit. They understand what's going wrong with the money and the financial system. And so, what they can do to fight the good fight is to accept crypto payments in their business. But of course, what this advert is conveying, and what a common tactic often is when you have a competitor that's a threat to you, you can often try and diminish them through humiliation, and that's the way I see this advert. They're trying to mock those cryptocurrency enthusiasts that are trying to accept crypto when they understand what's going on and they want to do their bit. But of course, if the retail customer doesn't understand and doesn't want to play along, then the banks can clearly take advantage of that. And so the banks do have an advantage in the fact that that system is already there, and if they can improve on what they've got and show that they're ahead of the game in terms of Bitcoin, then they've got the possibility of winning the game. So from the perspective of the central bank, some of the perceived advantages are that they can make payments 24/7 convenient, they can be instant and faster, and not only that, but they can competitively price them. Rather than using a third-party provider, if they can have something like a digital payment network that is controlled by the central bank, then they've got the possibility of trying to be more efficient than the system that we've got at the moment, and a number of business owners are likely to find that quite appealing. But does that make it similar to Bitcoin? If it looks like a duck and quacks like a duck, is it a duck? Definitely not, because when you actually compare it to something like Bitcoin, some of the unseen disadvantages of CBDCs is that there's the potential for barriers to entry, like a social credit score. Earlier in the year, there was a story in the news of Nigel Farage being not allowed access to his bank account. And also many of us, I've got a number of colleagues and friends who've had their bank accounts shut down because they were trying to access cryptocurrencies. And so, this is quite worrying. At the moment, they're trying to make a strong argument that they're trying to protect the consumer, but of course, when you see it from a different perspective, maybe it's not about that at all. Maybe they're just trying to eliminate a competitor. And of course, a centrally managed digital currency would give them the ability to do that. You've also got the possibility of payment limits. So again, if you look into the bank's paperwork, when it comes to things like this, they talk about the fact that initially they'll only have small amounts that will be used in the system, and this is to make sure that it isn't going to break. But of course, if those economic controls are there in the beginning, who's to say they couldn't switch them on or switch them off for individuals at a later stage? And of course, these are the ideas that are introduced by stealth if you're not careful. And then, of course, you've got the issue of data mining, which can be a tool of manipulation. And this is an issue that I think people are less familiar with, because this involves things like game theory. There are mathematicians who have been studying how to analyze data for the last 100 years. And of course, once all of our data is available, similar to how it is with the internet at the moment, it does give them the ability to manipulate things. This is quite a big topic, and probably haven't got time to go into it in more depth here, but I did do a talk called Bitcoin in the Future, which I gave in Romania in 2019. That's available on my YouTube channel, or there's a QR code if you want to queue that up for later. So, given the fact that the banks are likely to have an advantage when it comes to introducing CBDCs, because they're, improving on something that people are familiar with, how do we actually explain to people what the differences are with Bitcoin? And the trouble with Bitcoin is that it's quite a big topic, and it's difficult to know where to start. And so what I've done is I've tried to condense down the history of modern money, because I think sometimes when you understand the history, it helps create the argument, or helps in your understanding of why Bitcoin is different. And so some of this stuff you will know already, but hopefully it will enhance what you already know, which can add to your conversations when you're talking to friends and family in the future. So when it comes to modern money, where did the first central banks come from? So the one that's most relevant to our history is probably the Central Bank of Amsterdam, which was set up in 1609 and ran until 1790. Now at that point in history, most of Europe was operating using silver, and the Central Bank of Amsterdam was incredibly successful and it was successful for three main reasons. The main one was that there were no capital controls. The main one was that there were no capital controls, so it meant that anyone, anywhere in the known world could use their services. They also had low interest rates, and they also had stable exchange rates, because by having a stable exchange rate and anyone being able to use it, it helped to ease the friction when it comes to trade. Unlike these days when we've got a number of currencies, this makes international trade much more complicated. But at this point in history, the fact that the Central Bank of Amsterdam existed was a real benefit, and this was the point at which the Dutch really started to build their empire, because this lack of friction in their economy really helped them to grow and prosper. Now, what most people don't realise is that the Bank of England was actually influenced by a Dutchman, and this was William of Orange. Now, what happened at the time, during the 1600s, there had been a lot of religious strife, starting with Henry VIII in the 1500s. These battles had continued into the 1600s, and there was huge conflict between the Catholics and the Protestants. And at the time, James Stewart, even though he wasn't particularly against the Protestants, he'd married his second wife, who was a Catholic, and she'd had a son, and so the people of England were kind of tolerating him because they knew that his eldest daughter was a Protestant, and at that point he didn't have a son, and so they assumed that she would ascend to the throne. But when he had a son with his Catholic wife, suddenly they didn't like that very much. Now, his eldest daughter was married to William of Orange, who was a Dutchman, and so a number of the Protestants in the UK got together and spoke to some of their colleagues in Amsterdam and said, "Oh, we're not happy with this, would you take over the throne?" And so William of Orange actually approached the coast of England with a fleet that was bigger than the Spanish Armada, and basically James Stewart went, not going to be able to deal with this, and ran away to France. And so he ended up giving his throne away by default, and William of Orange took over. Now, clearly, to gather a fleet that was bigger than the Spanish Armada would require a lot of money. So he must have had some very powerful backers. And it's curious to think about, what was it that they wanted in return. And it turns out that one of the main things they wanted in return was to establish the Bank of England. Now, the names of those who made the loan to establish the Bank of England, it started with a loan of 1.2 million, still remain a secret, and this was one of the clauses of the agreement. And they wanted to be granted a charter to establish a Bank of England. Some of the other interesting clauses were that the directors of the Bank of England wanted to be granted the legal right to establish a gold standard. And this is interesting, of course, because, of course, at that point most of Europe was operating on a silver standard, so the introduction of gold standard was clearly new. They also wanted to make loans to the value of £10 for every £1 value of gold on deposit in their vaults. So again, the Bank of Amsterdam was actually fully capitalised, which meant that they could only make loans based on the amount of silver that they had in their bank. And one of the problems that they often had was that when people defaulted on their loans, that was normally the beginning of a financial crisis. And so in understanding that, this is probably where the idea of a fractional reserve came from, and this is where it was initially introduced. And they also wanted to be permitted to consolidate the national debt and secure payment of amounts due as principal and interest by direct taxation of the people. So this is interesting, isn't it? A group of prominent Protestants decide that we need a new king, and the people get the bill. It was ever thus. Looking into this, fairly shady what happened here, but these were the consequences, and this was where the Bank of England began. And not many people have heard of the Dutch Empire, but of course this was the point at which the Dutch were really starting to explore. They were starting to use the concept of joint stock companies, where people could kind of gather together and put together their resources in order to explore the new world. And this really started to create a lot of prosperity for the Dutch, and so clearly England decided that they were going to do a similar thing but do it differently. So what happened then? Then we come to Isaac Newton. Now, the interesting thing about Isaac Newton, the only thing I was really taught about Isaac Newton when I was a kid, apart from Newtonian physics, was that he was some dude who sat under a tree, waited for an apple to fall on his head, and invented gravity. I was never taught anything more than that, but it turns out that Isaac Newton was an incredibly influential figure. And this is what he did. 2 years after the establishment of the Bank of England, he was made Warden and Master of the Royal Mint, and he held this role until he died in 1727. He was assigned this role due to his renown as a scientist and for his support of what they called the Glorious Revolution. So this is where William of Orange turned up and managed to acquire the Crown of England without any opposition. And then he took quite a ruthless approach to removing the counterfeiting of coins, which is quite an important, which is a really important point when you start to think about currency and how a gold standard worked. You know, at that point in time, people were using silver coins, but they were often being diluted, and so different countries, there were differences in their currencies depending on how much of the metal was in their coins. And in 1717, he forbade the exchange of gold coins for more than 21 silver shillings. And again, this was a really key decision, because what it meant was for the next 100 years, while most of Europe was still transacting with silver, the British were using silver to pay for their goods abroad, but they were accepting gold in payment, because people would pay them in gold because they felt that the gold was undervalued. And so this is how England really started to build up their gold supply. But then we come to the Enlightenment era. So the beginning of the 1700s, you know, one of the first things that happened, you know, after a few years of having the Bank of England, you know, these joint stock companies got rather out of hand, and this is where the South Sea bubble and the Mississippi bubble came from. And it was a similar thing about 100 years previously with the tulip bubble. You know, these joint stock companies were a very new innovation, and people went a bit crazy with them. There was no regulation to stop them from getting out of hand. And in fact, it was these crises that really introduced the laws that stopped them from getting out of hand in the future. In fact, after the South Sea bubble, there was the Bubble Act, which prevented companies from having a joint stock company unless they had a royal charter. And so this kind of slowed down the use of these for a while. The Freemasons' London Grand Masonic Lodge was established in 1723, just after the resolution of the South Sea bubble. And then, you know, a number of years later, one of the most prominent societies that gathered around Birmingham was called the Lunar Society in 1765. And this gold statue is a statue that exists in Birmingham. I mean, we see lots of grey statues around, but I'd never actually seen one covered in gold before, because I actually saw this in person long before I heard about Bitcoin. I'd never heard of the Lunar Society, but apparently, you know, this was a group of very prominent people who were coming up with these new ideas, following on from the scientific revolution, and they had access to some prominent names. So one of them was Benjamin Franklin and Thomas Jefferson, who were in regular contact. But it would appear that the locals found some of their ideas rather strange, and so they earned the nickname the lunatics. And so one of the things I often say to people is, you know, if you think society's going mad, well, it was initially introduced by a bunch of lunatics. So I thought you might like to know where the explanation came from. But ultimately, these ideas were the foundation for the first industrial revolution, which began in 1760. And it was around this time that Adam Smith wrote his book, The Wealth of Nations, in order to introduce new projects. Even though they couldn't set up joint stock companies, this was when they started introducing building societies. So a group of prominent men would get together, and the idea would be that they'd help each of them build a house. And so they'd all invest for one person to build a house, and then they'd go on to the next one. And when everyone in the group had built the house, they would dissolve the company. So this was the beginning of the building societies. And Adam Smith really could see how this was reducing friction and helping new things to be developed. And so he wrote about that in his book. And so then we come to the Victorian era. And you can see how the businessmen are looking slightly different now. In the last one, they were looking rather elegant. Now they're looking a little bit more corrupt. And so, you know, the beginning of the Victorian era, you had the Napoleonic Wars, and this led to the panic of 1825. And so this was the end of the first industrial revolution, because ultimately what had happened was they'd temporarily suspended the gold standard in order to fund the Napoleonic Wars. And when they decided that they were going to end that and re-establish the gold standard, this sucked all the liquidity out of the economy, and the stock markets crashed. And this was the point at which Nathan Rothschild made all of his money, because what happened at the time was that whoever lost the war would have to pay an indemnity to the winner. And so because everyone thought that, because Nathan Rothschild spread the rumour that it was France who had won, everyone thought that Britain would have to pay an indemnity which would affect their currency, but in fact Nathan Rothschild had the news beforehand that actually Britain had won, and so that meant that Britain would get the indemnity from France, which would support their currency, and that was the beginning of his wealth. He made an absolute mint from making those bets on the stock market, and really it was a point of early stock market manipulation. But anyway, certainly the Panic of 1825 brought an end to the first industrial revolution, and it was a while before things got going again. And this was the point, it was after this that notes were made legal tender for all sums over £5. So long as the bank continued to pay on demand their notes in legal coins. So it meant that banknotes started to circulate in the economy, but they had a legal obligation to redeem those notes for a certain amount of gold, and that was introduced in 1833. And so this was the beginning of the classical gold standard, and ultimately gave birth to the Second Industrial Revolution, which began between 1870 and carried on all the way up until 1914. And so it's really important to realise that even up until this point there was a fractional reserve which was helping to stimulate the economy at this point, but it was still limited by the classical gold standard. It was during the Victorian era that they formalised a fractional reserve, but it was still somewhat constrained. So what happened after that? So then we had the gold exchange standard, and then we come to another important figure in history, which is Winston Churchill. And of course, Winston Churchill is often given credit for helping win the Second World War, but because of what he did in 1925, it was due to Winston Churchill that Britain lost its empire. Now, what had happened was, because they'd suspended the gold standard in 1914, similar to what they'd done with the Napoleonic Wars, clearly there was a precedent for this. And anyway, they thought the First World War would be resolved quickly, but it wasn't. And so in order to extend it, a number of countries around Europe temporarily suspended their gold standard. But of course, the First World War was so vast and extensive, by the time that it was over, there was no possible way that so many countries had become involved in this war, it was going to be impossible for a single country to pay the indemnity. And of course, we all know that it was Germany who was left with that bill through the Treaty of Versailles. And so because they couldn't pay the indemnity, this led to their country going into hyperinflation. And of course, most of Europe was watching this with horror. And so Winston Churchill, Chancellor of the British Empire, the British Empire still had control of the currency, realised he needed to do something because otherwise this was going to get out of control. And so in 1925 he introduced the gold exchange standard, and one of the key things he did with the gold exchange standard was he took gold out of circulation in the economy and allowed only bullion to be exchanged between countries in order to try and sustain the gold standard. But one of the key mistakes he made was that he undervalued gold, and so most of Europe who'd seen this story before, some of them remembered, they started demanding their gold back. In fact, the only country he could get to play along was the United States. But of course, this is what led to the Roaring Twenties for the United States. But then, of course, when the gold exchange standard started to kick in, and it did have an effect on their currency, of course, this sucked the liquidity out of the system. A number of banks went bust, and so this was what caused the stock market crash of 1929 and ultimately the Great Depression. Now, a lot of modern economists blame the gold exchange standard for causing the Great Depression, and while that's partially true, the real truth is that if they hadn't gone off it in the first place with the First World War, we wouldn't have had the First World War, we wouldn't have had the Weimar hyperinflation, we wouldn't have had the Roaring Twenties, the stock market crash of 1929, and therefore the Great Depression. And so blaming the gold exchange standard in 1925 is slightly misleading. The problem started way before then. So again, then we got the Second World War. The United States managed to keep their nose clean, and so they ended up with all the gold. And so once the war was over, Britain had lost most of its gold reserves because they'd had to give it to Europe when they demanded it, and so they had to set up a new gold exchange standard, and the US Federal Reserve became the arbiter of that. And then, of course, you're probably more familiar with the Nixon shock when Richard Nixon decided that they weren't going to exchange their dollars for gold anymore, and then we've got the petrodollar where Kissinger made an arrangement with the Arabs that they would only accept payment with dollars for their oil. So, why is this important? And I think it's because, one of the things I just thought about when I was researching all of this was that, a lot of these details were absent from my education. Things like, how key those decisions that Isaac Newton made right at the beginning of the establishment of the Bank of England. I mean, many people would say that, the British Empire would have been successful even if you just had the Bank of England, but actually the decisions that Isaac Newton made were key to its success. And of course, most of that was left out of my education. And again, we often are encouraged to celebrate Churchill, but ultimately, his bad decisions, caused a number of negative implications that we're still dealing with now. And so I love this Harry Enfield clip, which just kind of parodies some of the conversations that occur around the dinner table.
An ordinary dinner party, the sort of occasion we all enjoy. The men are exchanging witty stories. And look at the women, aren't they pretty? Look at the way they laugh, they're delightful. But now the conversation turns to more serious matters.
I wonder if the government should return to the gold standard. I think it should. Good. Then we're all agreed.
But oh dear, what's this? One of the women is about to embarrass us all.
I think the government should stay off the gold standard so that the pound can reach a level that will keep our exports competitive.
The lady has foolishly attempted to join the conversation with a wild and dangerous opinion of her own. What half-baked drivel. See how the men look at her with utter contempt.
Stephanie, we're going home.
Women, know your limits.
Yeah, so if you ever wonder why there aren't as many women in Bitcoin, now you know why. They've been they tend to be pilloried for their opinions. Although what's interesting is, this clip was actually published in the 1990s, and of course by then we're already starting to edge towards Keynesian economics. So actually what she was saying was definitely current thinking at the time, and of course, the idea of the gold standard was as ancient as the 20s. But again, this just goes to illustrate the complexity of these issues. People will watch this as a comedy show and think it's funny because the expressions are funny, but actually, what they're discussing are really important matters that really influence the quality of people's lives, and most people don't understand why. And so, what I like to summarise this as when I talk to people is it matters because this is what influences poverty. Now, if you look at, if you want to look at poverty, the place that most people would think of going to would be the United Nations, who maintain that they're looking at establishing peace, dignity and equality on a healthy planet. And in their statistics, they'll tell you that 734 million people worldwide live in poverty. And of those, 55% have no social protection. So again, in the West, this is something that we take for granted. We might have friends in America or Europe who all have access to some kind of welfare system. But again, not many people understand that these welfare systems only came about after the Second World War, because by then economists were arguing, well, we've managed to create all this money in order to go to war, what about the poor people? And so these were the ideas that were being propagated at the time. And so in the West, because we won the war, we have the money for these social protection schemes, but 55% of the world doesn't have access to them. And only 22% of those are covered by unemployment benefits. And so how does the United Nations define poverty? Well, they define it as those living at or below the ability to spend $1.90 a day. And they'll tell you that 10% currently live below this level. And this was 16% in 2010. And 36% in 1990. So yeah, we're clearly making progress because we've managed to reduce poverty since 1990. But of course, with these figures, they're gaslighting you because this isn't all the information. If you actually compare what the value of the dollar is compared to gold, you'll see that in 1990 an ounce of gold was $384, and in 2022 an ounce of gold was $1,959. And so in that time they might have had a 36% improvement in poverty, but they've actually had an 80% reduction in purchasing power of the dollar. And so when you look at it from that perspective, they're not making such great headway at all. And then we've also got the Centre for Global Development, who have done a study on poverty rates, and one of the things they discovered was that we were really reducing poverty in the 1800s. I wonder why. And then for some reason, since 1920, poverty levels seemed to flatten off. It was just flattening off, so clearly, you know, what were we doing in the, one of the things they asked in the study was what were we doing in the 1800s that was working so well? And, you know, genuinely you can go on their website and they are seriously asking themselves this question. But of course, one of the things they miss is that all of their data is denominated in dollars. And so actually, if you put the price of the dollar against the price of gold over the same time period, you'll see that when the gold price was flat, that's when we were reducing poverty levels. And in fact, if you take the price of gold into account, poverty levels aren't flattening off at all in the 20th century. In fact, they're getting markedly worse. And so, you know, these are really important data points that it's really hard to get people to understand. But actually, you know, these are the key points. The fact that we don't have a gold standard, and critically, gold that circulates in the economy, you know, this is why our poverty levels are getting so bad. And so, you know, where's the hope in all of this? And any of you who've read Seyfedin's book, Bitcoin Standard, one of the favourite quotes I have from his book is that history shows it is not possible to insulate yourself from the consequence of others holding money that is harder than yours. You know, in his book he tells a number of stories of other societies that had established money systems, and when someone else came in with a different source of money that had a better reputation or wasn't easy to replicate, it was easy for those societies to take over. So one of the examples is agri-beads in Africa. You know, a lot of the Africans were using agri-beads to trade with, and the Westerners came along and thought, well, we can produce those at home. So, you know, they produced a bit of agri-beads, started trading with the Africans who'd never seen anything like it. Of course, were accepting these beads as a form of money because that's what they were used to. But of course, you know, this was massively inflating their money supply, and this was why a number of Africans ended up in slavery, because it completely depleted their economies. And so there are two key points I want you to take away from the things that I've shared with you today. At the moment when people talk about Bitcoin, a lot of people say, you know, Bitcoin's just a store of wealth, we don't need it to circulate in the economy, we can just use it as a saving method. But actually, for money to remain honest, it needs to circulate as an everyday payment mechanism in the economy. You know, it was Churchill's gold exchange standard in 1925 that took gold out of the economy, and then Roosevelt did the same thing in America. And this was to try and establish a gold standard because they'd seen how much the Germans were suffering through the Weimar hyperinflation. And ultimately it was a fudge. You know, it didn't take them back to where they were before, and in fact it set a pattern to make things even worse. And you can see from the charts that I've shown you that it was when money was actually circulating in the economy, that's what helps to keep the money honest. And so it's not just about the fact that Bitcoin mimics gold, it's the fact that we're able to use it as a payment method that will really make the difference. Because ultimately, it helps to keep the money honest. And then the other discussion that people often talk about is the fact that you can see transactions with Bitcoin. Now this is a nuanced argument. You know, a lot of people argue for privacy coins because they think that Bitcoin is too transparent. But actually you need the transparency on the base layer to avoid problems with debt, creating additional currency. You know, one of the reasons why we have so much debt is because a lot of these arrangements are happening behind the scenes. We've not been able to you know, call out the government because we aren't party to those arrangements. Whereas if countries were actually were paying for things with Bitcoin, we'd immediately see if there was any shady business going on. And at the moment we have a situation where there's no transparency for government, and they're consistently trying to insist that we need to be more transparent. And of course, CBDCs would emphasise that as well. But actually we need to flip that. Individuals, because they're more vulnerable, do need some privacy, but actually it's the organisers, the elites, who need to be more transparent, because it's a lot of their hidden agreements that have really made things worse for everybody. And so, again, you can't beat a video to emphasise a point, and so a while ago I created this little story just to help people understand a little bit about how the money system has developed, and I mimicked The Lord of the Rings for this. So I thought I'd show you this now just as a form of entertainment and to help embed some of the ideas I've shared with you today, so I'll just play that for you now. The world is changed. I feel it in the water. I feel it in the earth. I smell it in the air. Much that once was is lost, for none now live who remember it. It began with the forging of the great rings. 3 were given to the elves, immortal, wisest and fairest of all beings. 7 to the dwarf lords, great miners and craftsmen of the mountain halls. And 9 rings were gifted to the race of men, who above all else desire power. For within these rings was bound the strength and will to govern each race. But they were all of them deceived, for another ring was made. In the land of Mordor, in the fires of Mount Doom, the Dark Lord Sauron forged in secret a master ring to control all others, and into this ring he poured his cruelty, his malice, and his will to dominate all life. One ring to rule them all. One by one, the free lands of Middle-earth fell to the power of the ring. But there were some who resisted. A last alliance of men and elves marched against the armies of Mordor, and on the slopes of Mount Doom they fought for the freedom of Middle-earth. Victory was near, but the power of the ring could not be undone. It was in this moment, when all hope had faded, that Isildur, son of the king, took up his father's sword. Sauron, the enemy of the free peoples of Middle-earth, was defeated. The ring passed to Isildur, who had this one chance to destroy evil forever. But the hearts of men are easily corrupted. And the ring of power has a will of its own. It betrayed Isildur to his death, and some things that should not have been forgotten were lost. History became legend, legend became myth, and for 2,500 years the ring passed out of all knowledge, until when chance came, it ensnared a new bearer. The ring came to the preacher Gollum, who took it deep into the tunnels of the misty mountains, and there it consumed him. The ring brought to Gollum unnatural long life. For 500 years it poisoned his mind, and in the gloom of Gollum's cave it waited. Darkness crept back into the forests of the world. Rumour grew of a shadow in the east, whispers of a nameless fear, and the ring of power perceived its time had now come. It abandoned Gollum, but something happened then the ring did not intend. It was picked up by the most unlikely creature imaginable, a hobbit, Bilbo Baggins of the Shire, for the time soon comes when hobbits will shape the fortunes of all. So this is some more information. So I've got my website, which is Satoshi's page. This is just showing you some of the newsletters that I have in addition to the book. I'm proud to say that I've now got lightning payables on there. It's taken a really long time to figure out how to do it, as far as I know. No one else is doing that at the moment. The most recent newsletter will always be free, but it's the old ones that have the paywall on them, and there's the option for people to sponsor the newsletter if they want. So this is just showing you how the paywall works. Brings up the QR code, scan it with some sats. When it's paid, you'll see confetti, and then the rest of the newsletter is revealed. Shouldn't take that long. There we go. And then the rest of the newsletter is revealed. So that's just showing how that works. And so the idea behind this, I mean, as a dentist, when we were treating kids, we always used to talk about tell, show, do. And so, you know, the newsletters are kind of telling you about, and the book are telling you about Bitcoin. The videos, I've got videos on how Bitcoin works and things like that, so that's showing. And then the idea behind the lightning payables is it's forcing them to actually do. So there you go. Any questions, anybody?
Yeah, I've got one, Victoria. Just start off by saying thank you very much. That was a really fascinating bit of history about money, essentially. And I like the fact that showed us so much there, because I really like the fact, or the phrase, history doesn't repeat itself, but it rhymes. And there's a lot that we saw in your talk there, I think, that rhymes with a lot of what's going on at the moment. So take heed, I guess, would be the message. But with regards to CBDC, so we're seeing this huge surge in interest in CBDCs across the globe. However, we have seen some failed CBDCs already. We've seen the e-Naira in Nigeria. We've seen Ecuador, they've pulled it, and so I can't remember the other one, but there's another one where they pulled it. Having worked in the public service myself and in the public sector, and seen how dreadful the public sector are and our governments are at building things like basic IT infrastructure, where do you see our government going with our CBDC?
Yeah, well, I mean, the appalling state of our public sector is definitely something I can relate to, you know, having worked in the NHS, so I can definitely relate to that. I also heard through the grapevine that there was an advert for someone to help them develop their CBDCs, and they were offering like 60 grand a year. It's just like, any idea how much some of these people are paying, so they are clearly on the back foot with this, but, you know, doing their best to put in a good show of progress. In terms of the countries that you've talked about, I think the problem with those countries is that they're typically non-compliant anyway, so I probably wouldn't expect them to take it on board. I think the problem with the West is that we've had it so good for so long. There are a lot of people who are still very wedded to the idea that government will solve all their problems. And so for that reason, I think it's a really difficult cycle to break. You know, it's persuading people that actually, you know, government doesn't solve any problems, actually often creates more of them. You know, it doesn't matter what they do, you know, it's really hard for some people to get their head around that. It is changing. I think certainly with the pandemic, you know, more people are starting to question, you know, do they really know the right thing? But even then, you know, there are some people who will still buy into anything that they're told. And so for that reason, I think they've got a better chance in the West of introducing something here. And also, especially for the business owners who are quite overwhelmed and don't have time to really properly think these things through. Not the case for all business owners, obviously, but for the majority, you know, most of them are just trying to stave off bankruptcy and keep themselves going. And so if the government says you need to do this, or, you know, we'll take your license away, or do something else to punish you, most of them will probably just go along because they've got no choice. And, you know, even in that talk that I did in 2019, one of the things I was trying to emphasize to the Bitcoiners is that I really think the businesses are key to changing things, because if the business owners get it, then, you know, it kind of forces the retail customers to go in. And it's not just the case of the fact that you're accepting a Bitcoin payment. You know, if the businesses understand how they're better off by having another option, because if your business relies purely on the banking system and something happens to the Bitcoin and something happens to the banking system, what do? Whereas, you know, if you're encouraging them to start, you know, taking on a new system and introducing it to them, they might not use it straight away, but you're starting to educate them. And this was the idea I had when I introduced it in my business. I didn't actually expect anyone to pay me Bitcoin, but I wanted them to know that I was looking into this technology and I was setting up an alternate payment system. Because at the time, I was still planning on continuing as a dentist, and I realized that, especially with a highly capital-intensive business, things like inflation are a real problem. You know, you actually get stories of people in South America who trained as a dentist and then ended up working in a bar because they can't afford to run their dental practices. You know, if it costs more to run your business than you're able to charge your patients, you've got a non-starter. And so, you know, this was, you know, my idea was that if I start building up my capital account in Bitcoin, I'll have more of a cushion if something like that happens. And then, you know, if I offer my patients a discount for paying in Bitcoin and incentivizing them, you know, they might buy it in the hope that, you know, they can use it for their dental treatment in the future. And by then it'll be worth more, which would help with, you know, how much private dental treatment costs. So these were all the thought processes that I was going through at the time, but I had to do quite a lot of research before I came to that conclusion in order to be motivated. And I think that's a really difficult thing to convey to someone in 5 minutes. You know, you really need to understand some of the background and how our money works, and to have suffered some of the pain of it not working properly and realizing how vulnerable you are before you even go down that route. And
what I often find in the Bitcoin space, the people who really get it, there's normally some history of some kind of trauma that forced them to look into it properly. Whereas for most people who are managing quite well with their lives and everything's going fine, they can't see what the problem is. They don't until it goes wrong. So, yeah, those are all my motivations.
Thank you.
Yeah, I guess. I mean, what you last said, that makes sense in the adoption is quicker in South America and those places rather than here where it kind of works. Unless, of course, you don't really trust the political classes, in which case you know it's going to go wrong. Everyone else has got to wait and see, but some people know that it's kind of doomed.
Yeah, and actually it's the people who know that need to spread that message, because it's a real battle for hearts and minds. And the only way you're going to do that is by understanding. And it's tricky when it's a difficult thing to convey, because people always look for the easier option. But I think it is a race against time. I mean, Bitcoin has huge potential, but of course the government have the advantage of the fact that they already run the existing system. And so talking people out of that into something new is really, really tricky. And really the best thing that tends to persuade people is, incentives. This is, I've talked about this with a number of my Bitcoin colleagues, because they go, is it really going to save the world and people will just be bad? And it's just like, well, the trouble is, the world we have at the moment is run by really poor incentives. And so the people who get rich are the ones who are doing the bad things and getting away with it. Whereas with Bitcoin, because it's an honest form of money, if you do bad things, you don't get away with it. You really suffer. If you go into cryptocurrencies just because you want to make money, you end up buying shitcoins, buying Bitcoin, and then you've lost your opportunity. But if you understand and you go into it for the right reasons, then you're building a foundation that doesn't just benefit you, but it benefits everybody, because you're building a world that works with better incentives. And I think that's a really important message as well that isn't necessarily talked about very much.
Definitely. Well, we see the narratives controlled as well now, so that's that's part of the trusting, isn't it? You've got family communication, which is Bitcoin, and then just speech, free speech, and all of that, which is obviously a war zone at the moment.
Yeah.
Just for clarity then, Pete, so when you say the narrative, just for everyone in the room, you mean what we're being fed by the media?
If you spend a day watching the BBC and all of the stuff that the government propaganda, then you're going to have a certain view of the world, aren't you? Whereas if you sort of branch out and seek out different, or if you're well travelled or something like that, some part of your life where you've got more open-minded, broader perspective, then you can start to see that that's just a little clown world. It's a little theatre, isn't it? It's not all real, but it feels real for somebody who's lived in it all their life, and that's all they've ever seen.
Yeah. James, did you have a question?
Yes. So one of the key points you had in there was that the circulation of the money was required to keep it honest. Mm-hmm. Could you expand on that a little bit? Because it's quite difficult for me to fully understand that.
Yeah.
And what sort of velocity of money would you need to
spend and replace?
Yeah, it's a bit like that.
It's a different kind of point. So do you remember the chart I showed you where with poverty levels it went down in the 1800s and then flattened off in 1920? Do you remember what I said in my talk, what happened in 1920? The gold exchange standard, that's when they took gold out of circulation.
Right, okay.
And so during the 1800s, people still had access to gold. If they had a banknote, they could go to the bank and the bank was required to give them gold in exchange for it. And so because of this, people would notice straight away if something suddenly costs more gold or not. It was because they're actually able to request it for those sorts of pound notes. Once they took the gold out of circulation, the general public had no way of knowing if that £20 would actually enable them to access £20 of gold again. This is how they managed to do the accounting trick behind the scenes, because we weren't actually using gold for money. And so a lot of what was happening with the money was happening behind the scenes because people couldn't see it. It's when you can actually go to the bank and collect the gold, and you go into a shop and it's like, this is one piece of gold, and then suddenly the next day you go and it's like now it's 1.5 pieces of gold. It's like, well, why did it go up? You know, you'd immediately question it. But with banknotes, what you can do is you can kind of keep the price of the banknote the same, but actually you're constantly losing value from it behind the scenes because of the debt that's been created.
Yeah. I still don't think it sort of fully gets to it in my head, because say if you're on a Bitcoin standard, or you can't really take the Bitcoin out of circulation at this point. It's sort of the genie's out of the box.
And that's the benefit of it, yeah.
But it doesn't necessarily have to be linked to the money that's used in it every day. You could have kind of a dual system like we have essentially, where your asset value in Bitcoin goes up, but you're just using a rubbishy dollar or a rubbishy pound for day-to-day transactions. So sort of the properties of money have split in two rather than sort of being combined together.
So then we're going into Gresham's law in terms of.
Well, yeah, I understand why you find a lot of people don't understand that the debt. How have we managed to create trillions and trillions of dollars in debt behind the scenes, but we've not got the kind of inflation that we'd expect given the amount of debt that's created in the economy?
Because we've taken from the future.
Partly because we're creating debt, because we're taking value from the future. We're taking value from the future, and it's like an illusion that you don't see because it's not tangible. You know, when you're using a payment system. The other thing about gold was the fact that it got to the stage where the whole of Europe was using it. So again, it needs to be at the stage where everybody's using it as a form of money, and that's when it works. The problem we've got at the moment is we've still got Bitcoin, we've still got fiat. And so its growth is very much dependent on how many people own it and how many people are kind of holding it out of circulation. But something like a Bitcoin ETF, for example, you know, you've got people with huge resources who can gather up as much Bitcoin. As the price goes up and people are finally persuaded to sell it, you've got someone with a lot of resources who could quietly be gathering all of that Bitcoin towards itself before you actually get to the stage where it's running in the economy. And then when you get to the stage where it's running in the economy, you know, because they're kind of holding it out of the economy, Bitcoin will be at a certain level. You probably never heard of this, but there's a story of an African king who was like the wealthiest person who ever lived, and he decided to go on a trip. I can't remember what the destination was, but he had so much gold that on the way he was spending so much gold he destroyed the economies of all the countries that he passed because he basically inflated their currencies because he had too much. And so you've got the potential where someone like BlackRock could do exactly the same thing. They could spend about 10 years collecting all the Bitcoin, as everyone, you know, it could go up to $1 million, everyone goes, yeah, we're rich, and they could spend it, sell it to BlackRock, and then BlackRock could dump it all on the market, crash the price, anyone who's holding it could then be persuaded to sell, and they collected. That's exactly what Nathan Rothschild did in the early 1800s. So when you've got these powerful players and you're working with a form of hard currency, if it's not actually able to be seen and used and touched by people, and they're not motivated to actually use it for themselves, those are the sorts of games they can play.
I see. So I see your argument now. So your argument sort of, it needs to be as widely distributed as much as possible, and
Exactly.
to achieve that, you need sort of circulation.
Exactly, because you could divide one Bitcoin infinitely, you could actually get to the stage where you could run the entire world's economy with just one Bitcoin. And then because one of the things people often worry about is the fact that Satoshi Nakamoto holds 1 million coins. And so you get to the stage where the whole world runs on one Bitcoin, and then Satoshi goes, I've got 1 million of them, and he does exactly what the African king does, dump it on the economy and completely destroys it. And so getting to a point where you've got someone who disproportionately holds that kind of level makes a difference on the ground. And of course, once you introduce those sorts of financial panics, people don't necessarily think straight in those sorts of situations because you're destroying people's lives. And so that's when powerful and rich people can really get an advantage. And so by more people having it in the economy than powerful people having it in the economy, that's when it's beneficial. And to a certain extent, we are in that situation because I think there's only 4 million Bitcoin left to mine. So the large majority, and apart from Satoshi's million coins and some of the companies who own them, it is fairly widely distributed at the moment. And you could debate that maybe that's why Satoshi designed it that way, because he understood some of these problems. Because while you've still got the majority where it's widely distributed and you start to use it in the economy, it undermines the power of some of these powerful players. So it's really interesting to see how it will play out. But this is why it's really, education is so important, and trying to help people understand these nuances, because it is complicated. You know, people don't necessarily understand it straight away. They're normally just looking ahead of them about the next day's meal or whatever. It's only when you get to the stage you don't want individual powerful players having big collections of Bitcoin, because they can do a lot of damage with that.
It's another reason why, if the government decide that they make Bitcoin legal tender, maybe we should consider not paying our taxes on Bitcoin, because over time the government could accumulate Bitcoin and continue to do this and gauge and do exactly what Victoria talks about. So to a certain degree, whilst we're living in this grey area, or if we do move into this grey area where these two currencies coexist together at a relatively equal standing, using fiat to pay your taxes is actually quite a good thing, because you're giving back the bad money back to where it came from. So something to bear in mind, should we get to that point in time.
Yeah, because ultimately, if everyone's using Bitcoin in the economy, you know, that's when you're reducing poverty levels, because you're actually, you know, paying for, you're sustaining the value of the goods and services that we pay for. But also, you know, something like Bitcoin undermines the power of government at the moment. It's become so big and so vast that they've got inordinate powers. You know, they make rules left, right, and centre. It's almost impossible to move in the world without becoming a criminal. There are so many little rules that they can get you on, and don't get me started on speeder tickets. So you know, it's just ridiculous. You know, you can be a good person, but you know, you're constantly finding ways to beat you over the head, and so you know, undermining the power of government. And again, a lot of people don't understand why it undermines government, and it's because their ability to create money has enabled them to produce a system where they are able to control people with, you know, an unfair legal system and things like that. You know, if you reduce the power of government, they can't pay for all of those things anymore, and so you start to bring these things into balance again.
So these ETFs that it looks like they're going to be coming out, you think they're good or bad? Or because if all the money goes into them and they're buying all of the Bitcoin and not spending it, it's not in circulation, right?
Yeah, and so I think the Bitcoin ETF is really interesting, and I suspect that they understand the power they have with an ETF if they're able to provide it. But on the other hand, it actually has the potential to destroy the entire financial system. And I think the SEC understands that. That's one of the reasons why they're resisting a Bitcoin ETF. I have seen news reports where some economists have talked about this, because it's a hard currency. We've never had this kind of currency before, and you talk to people who are interested in gold, and they'll talk about the fact that, you know, once you had a golden ETF, it enabled them to manipulate the price of gold, and they can kind of get away with it because people generally, you know, it's expensive and awkward to take gold back into your own custody, especially if you have a large amount of it. But with Bitcoin, you can do that. And so, you know, if Bitcoin tries to manipulate the price of Bitcoin, and you've got the majority of people in the population holding it, or actually buying it, or buying the real thing and then keeping it off exchanges, they, you know, it has the potential to undermine the way in which the financial system works. Because, you know, I was listening to a podcast earlier today, and apparently US debt is going up by £12 million a minute at the moment. You know, the amount of money that's being created behind the scenes. And so if you've got something like a Bitcoin ETF which starts to, you know, create some kind of limit to their ability to do that, or at least gives you the signal as soon as they're starting to do that. I mean, a lot of people don't understand that it's not just the debt that's a problem. It's not just the fact that they create this debt and lend it into the economy, but it's the bets on the debt because of the financial system, and it's the bets on the bets on the bets, and these are the derivatives. And so, you know, something like a sound currency that's injected into that, it's like a parasite. It could potentially bring the whole thing down. And so, yes, they have the potential to do that, but on the other hand, they're playing a very dangerous game. You know, they'd have to do that very, very well, and hopefully there are enough rich Bitcoiners to understand what's going on in order to try and balance it out. And as I say, because there is, you know, you've got a lower proportion of Bitcoin still to be mined than is already in circulation, and so they would have to play that game very cleverly if they were going to win. But the argument is finely balanced. So again, you know, this is why education is important and really trying to get it into the economy. And it may well be that it's too complicated to understand yourself enough to actually explain to someone else. You just have to go, we need to spend it, we need to use it, and we need to keep it off exchanges, and we need to know how hardware wallets work, and we need to know how to use this thing. You know, it's just like, bring bastards down.
So I have a question that actually comes on from what you just said. To what extent do people have to understand the technology to understand the promise?
I think it depends on the person really. I think there are probably some people who find it interesting, who, you know, it's like the Bitcoin adoption happens in stages. I mean, first of all, you have the techies who just like computer technology, and then you've kind of got the early adopters who've been burned by the existing system, and they understand what's wrong, and they're like, we're going to go for this thing. But then, you know, when you talk to the majority of the population who haven't suffered like that, they're kind of like, I'm not sure what your issue is, and you seem to be a bit of a narcissist because you keep kind of going on about this thing and you won't let it go. And it's just like, well, you know, you don't understand because you haven't seen the bad side of it yet. You've not been affected by this, and it's really hard to change the minds of those people. And some people just aren't going to get it until it's too late. And then there are other people who will just go along to play along when everyone else has adopted it. And so it's almost like you have to reach that tipping point where there are enough people. And I think certainly, you know, business owners have, especially if they're struggling, you know, at the moment, government seems to be on a real mission to eliminate small business, and a lot of people don't really understand where this comes from, you know. But if you can get the independent retailers to understand that their survival depends on this, if they understand how it works and they understand how to hold it and manage it, and accept it from their patients and talk to their patients about it, not necessarily push it down their throats, but incentivize them, you know, I think that's a game changer.
Yeah, well, people who get key banks, they always thought they'd jump on it, but sometimes they don't even get it. You know, like Russell Brand's like, he's still on that fence, he's not getting it.
Hey,
how obvious is it?
You can throw everything at some people and they go, I give up, I'm just going to be homeless. So you can't save some people, you know, just, you know, some people will be challenged by something like that. Apparently you would have not do this to me, I'll find a way to figure this out. But not everyone responds like that. Some people, you know, they're faced with a challenge, it's just like, it's too hard, I give up. So, you know, unfortunately, we live in a world where you've got all sorts.
There is like it up, and then there's our fighting as well, and that's also pointless.
Yeah.
You know, you're better off finding a better system.
Well, do you fight it? So it's like, you know, you've got the whole Israel thing going on, and you've got, you know, Hamas attacked Israel, so Israel wants to attack them back, and it's just like, guys, have you learned nothing from the last 100 years? You know, instead of deciding that, you know, if someone does something to you, it's like the whole eye for the eye argument. But if you're an intellectual, you kind of go, well, the only reason they can sustain these wars is because they're creating money out of thin air. It's the only reason they've been able to fought any war throughout history. So if you take that away from them, you solve the problem. So it's not that you don't fight it, but you learn to fight it smarter. And again, you know, pointing that out and encouraging people, it's just like, you want to win the war in Israel? Buy Bitcoin. Pay Bitcoin, accept Bitcoin. But, you know, most people won't be able to make that.
You know, individuals don't really want a war, do they? It's only the political classes that want a war.
Well, exactly.
You know, they invest in Reagan and, you know, Lockheed Martin and stuff, and have a war.
Exactly, but of course most human beings are compassionate and they don't like seeing what's going on. And when you realise that actually, even as an individual, even if you're just one person, you can't go there and fight your war yourself, you can't stop it, you can't talk to politicians, but this I can do.
Yeah.
And if everyone does that, And the amazing thing about Bitcoin is like it's really hard getting human beings together on the same page to do anything. But it's like, you know, Bitcoin's so brilliant because it's like someone else has set the rules, you're either in or you're out. And so it makes it a binary choice. You're not constantly going round and round in circles debating the issue. It's just like, we've done that, this is how it is, this is how it's going to work. And it will do this if everyone does it. And so you can kind of set a trajectory and you've got a framework that everyone can jump on, which is even more powerful.
It is.
Yeah. It's like the politics is embedded in the code because the ideas have designed it.
Well, that's what I thought was so interesting about when I first read the white paper. It's interesting because it's a 0 to 1 moment in computer science, but more interesting than that is all the incentives are aligned.
Mm-hmm.
That is incredible.
Yeah, absolutely.
And it's still true 10 years later.
Yeah. Well, I think the people who were interested in it early, it's really fortunate that people who were, there was enough influence to take it in that direction. And, you know, it's not just Satoshi Nakamoto we need to be thankful for, but to all those early developers who worked on that as well.
And all the stuff that failed before that.
Exactly. And the fact that, and you know, the 2017 when we had the halving, you know, it could have gone either way.
Yeah, that was the
Block wars.
Yeah, that was
yeah. There are a number of times when it could have failed, but it's almost like this is divinely protected because we really need it.
I don't know any more after that.
I think that was, that's why it went so high in like 2020. It's like, excellent.
Great. Well, thank you very much.